Trade with the trend. The trend is always your friend. As a trader, it is important that you focus your trading in the direction of the trend. Avoid the tragedy of anticipating for reversal. Instead, focus on trade continuation, get a pullback, and you make your trade entry. In this lesson, I'll be showing you exactly how you can determine your trend using the moving average 200. So the black moving average you are seeing here, this is my moving average 200. So let's go into the rundown. I'll be showing you how you determine the trend using your moving average 200 and how you can make your entry with additional confirmation. So let's go into the setting of the video. Here is the setting. Period is 200, shift is 0, method is simple, you apply to close. As you can see, they have a Bollinger Band, the period is 20, the deviation is 2.0, the shift is 0, you apply to close. We have our relative strength index, the period is 14. Here, we don't want the line of the moving average of the RSI to show, so you can change this to the color of your background. If your background is black, kindly change. If your background is black, kindly change this to black because we don't want the color of the RSI to show. So after that, we have our commodity channel index. The period is 14, typical price, high, low, close, and this is the setting of the indicator. So we'll be using a moving average, simple moving average 200 to determine the trend of the market, which is what you are seeing here. So whenever price is above it, right, we said when price is above it, we are in an uptrend, and when price is below it, we are in a downtrend. However, in this scenario, you can see that price pierced a little bit above it and then later below it and then later went above it. That is important for you to take note of. Why? Because we are treating this as a zone, not a line. So have it at the back of your mind that even price passes through it a bit, that doesn't violate the trend of the market. The trend will be violated when price break through it, return back to it, retest it, and then continue to the downside. Otherwise, we maintain the original trend of the market. So we have this bounce on it from here, and then we have this pullback. And then I'm having, when I saw this bullish candle rejection on a second retest, that is why I made this particular trade entry. Okay, I made this trade entry because price come and reject bounce on our moving average period 200. This moving average is the last zone of a pullback. Whatever make price to stay away or below this moving average is already a change of trend. So when price bounce on it, I now pay attention to my indicator window. You will be patient enough to wait for your CCI line to cross above 20. You can see the CCI line, which is this line you are seeing here. So here it crosses above 20, and immediately I saw that cross above 20. That is how I came in. I have my buy trade. You can see my stop loss here, and then you can see my take profit. This is exactly how I take advantage of this. And then remember, this zone is valid zone as well. This zone is serving as our support zone because price has left here initially, and then this is a second retest of price into that zone. So you can take advantage of this. The process is very much simple and you can work on it. Here again, you can see this. This is our moving average. You can see the 200 simple moving average, which we use to determine the trend of the market. Okay, and in this case, you can see how price pray out from that zone. So price pull back to it. If you look at this carefully, this is a divergence. This is a typical divergence. So this divergence is an additional price confirmation, and you can see after that price did what? This is a continuation trade, and as you can see what happened next, price went up, come back, retest above 50, cross above 50 to the upside, and then cross above the middle Bollinger Band, and then you see that move to the upside. Now, the moving Bollinger Band, whenever a price is in a strong trend, it will respect the middle Bollinger Band. If it is a strong uptrend, it will be above the middle Bollinger Band. If it is a strong downtrend, it will be below the middle Bollinger Band. Okay, then we use our indicator window for our additional trade entry confirmation. So that is exactly how you can take advantage. This works across all pairs. Let's look at volatility 75. This is volatility 75. You can see this is a downtrend scenario, right? So you can see this. If you were here earlier, this should have been your trade entry. When this flag pattern, this is a bearish flag pattern, was forming, all you need to do, you can see this is a pullback because already it's a downtrend. You can see that price is below the 200 moving average, and that is a downtrend. So you have that entry immediately at that zone. Here again we have a new trade confirmation. Look at this pullback, it pulled to the level of 50, it has crossed it to the downside. Now I have a bearish pin back candlestick formation, which was rejected from 200, which was rejected from the 20 period moving average of our Bollinger Band. So I have a sell trade here, obviously. So that is my stop loss, and then let me have my take profit. So let's go. So that is it. I have this trade now. I've placed my trade, and as you can see, I'm using the least lot, and I am not risking too much. I am only risking 3.70 cents. So that is just what I am risking. So again, what are the conditions? Why am I in this trade? Let me take my time to explain. First, I determine the trend. Price is below the simple moving average 200. We determine the trend. So we are in a downtrend. Establish downtrend. And after we have established a downtrend, what do I have? I have price pull back to the middle Bollinger Band. This middle Bollinger Band is more or less a 20 period moving average. And this, when price is in a strong trend, price will always respect this. So price pulled back to it and gave me a pin bar candlestick formation. So this is the pin bar candlestick formation that just closed. And then price pulled back to 50% of my RSI and my CCI line, retest it and cross to the downside. So this is my confirmation, and that is why I take this trade, and that is simply how you can go about it in any price scenario of your choice. So let's look at this GBPUSD. And what is the trend of the market? Let's determine our trend. The chart is still loading. Great. So this is still a downtrend. This is a bearish movement. Price has pulled back to this zone. Remember, the last point of pullback is the 200 simple moving average. So price has pulled back to this zone, and then you wait. Now you would have waited for price to do what? To retest, to close below the 20 period moving average. If price close below it, and we already had this confirmation, right? But price is yet to close below the middle Bollinger Band. We already had this confirmation, which is okay, but since price has not closed below the middle Bollinger Band, we can't go in for that sell. That is just the reason. If not, would have had this sell entry right away. So this is how simple you can take advantage of this strategy. If you have any question, you can ask in the comment section of this video. Thank you for watching, and please do not forget to like, share, subscribe, and turn on your notifications so you'll be the first to get notified when we upload our next video. See you in the subsequent video.